So this is the front of Miss Lou May. It's a very small apartment complex in Fort Worth, Texas. And this is the opportunity at a glance. So giving you a total picture of what, if you were reviewing this deal when it was live, we were looking at 9% average annual distributions, 72% 5-year total return, 13% IRR, 22 units as a 1925 build. At the time, it was 95% occupied. It became 100% while we were in due diligence, so that's always good. No bank problems there. We had a 1.175 equity raise. The total purchase price was $2.5 million. We're going to put 275 into the rehab, and we did a 70-30 GP-LP split, or LP-GP split, and then there was a 6.25% reversion cap rate. So what that means, we're going in a little bit under a 6% cap rate, and so because we want to be hyper conservative and make sure that we're not sure what's going to happen at 5 years on exit, we assume that the economy is going to take it, going to go down the toilet. So we decided to adjust the reversion or exit cap up by almost 80 basis points, 75 basis points. So we felt that that was very conservative. Normally we only do that kind of thing in a secondary, almost tertiary market, 100 basis points for a tertiary. Sorry, I won't get too much into the weeds, but that's the opportunity at a glance. And I'll try to remember to cover what it ended up at, or maybe So actually I'm going to go ahead and do that now because I'm going to forget. So we ended up, through the challenges you'll see us going through, getting to, instead of 9% annual distributions, going to a minimum of 11%, and it will be better than that. Then our total return is going to be 86% minimum plus. The IRR is over 15. Our equity raise stayed the same, and our rehab stayed the same, and so did our reversion cap. So just we ended up changing a few things and getting, during our closing period, a better deal for the investors. So the construction, it's an interesting deal. So it was a 1925 and restored again in 2001. So normally I don't do deals that are older than 1970 because of a lot of the mechanical systems and things that we run into. However, this one, they had replaced all of the electrical, mechanical systems in the building, and the foundation checked out. Obviously, we do an extensive due diligence, including environmental studies, while we have the property under contract. This property had 5 buildings, and they're just 2 stories to them, pier and beam, and individual HVACs, which is always awesome, especially if individuals are afraid of COVID or things like that. At the time when we got into the deal, there's tenant-paid bills, or there were not tenant-paid bills, so this was an opportunity to rub back, which is ratio utility bill back, some of the expenses that the tenants, or that we are paying back to the tenants. So that's something we're working on now. And then this is what we shared with all of our investors, what our business plan was going to be for us to execute. So we would re-tenant and improve operations. So that's kind of where we're at right now, where we put in place professional property management who pays a little bit more attention to the property. They also are giving us a really great deal on our fee. Normally on a small deal like this, it would usually cost 6% to, I've seen sometimes 10% of the gross as their fee, but instead, because they had a few properties nearby, I negotiated to get it to 3.5% as their fee, because I was like, you guys are going to be in the area anyway, like, come on. So they said, okay, and then we're going to reposition this into a B- class asset, and then also keeping our attention on the medical professionals that are our resident base currently, and adding more when we need to. We'll be re-amenitying the property. So for example, there's like a little Weber grill. We're going to put in a full nice countertop bar grill with a pergola, all the kind of usual stuff that we do. And if you want the full presentation from this, happy to share it, but it gives you kind of ideas and pictures. We're going to add lockers, the carports, barbecue and bench, LED lighting, security gate cameras, vending, lighting, additional laundry, and then rub back. And also when we're adding those LED lights, shower heads and aerators, that's also helping us to decrease the cost that we have on those shared bills, because we still have to share them. We can only bill back a certain percentage, but that will reduce our overall cost. So then we're going to continue, obviously, interior renovations as the tenants turn, because either they're going to love the fact that we're doing construction and we're changing the entire curb appeal and the property itself, or they're going to hate it because the rents are going to go up. So the ones that stay, that's great. We'll give them a little awesome package, some new fans, some new blinds, little cabinet pulls, things like that, just to say thank you for staying. In a small rent bump, we actually assumed almost 0 rent increase the first year because we just didn't know with COVID what to expect, so we tried to be conservative. But point is that we're going to be spending that time to do interior renovations, and it will look very nice. And our exit strategy on this one is to hold for 5 to 7 years, which is our main focus. And then after we had to go through our challenges and flip the loan and get it done or whatnot in the time frame that we had, we ended up being able to add a refinance to this. We didn't put that in our initial projections, so that's going to add another cash out. So investors typically get cash from our distributions from the cash flow. They'll get distributions, or not distributions, they'll get the big check on sale, but also if we refinance, we'll refinance cash out and distribute to everybody. So it's just an extra payday. So this is where I got my inspiration for the exterior, and so it's kind of hard to show you this because this is not a full cycle deal. I'm going to give a summary of one at the end, the first one I was ever involved with, but this is the inspiration for the exterior. So we're going to change the roof. We're going to make it a darker paint color on the outside. I don't know if you can see it, but there's these really cool awnings that are above the windows on this, and so there's a couple of comps around the corner that did that, and they're very age appropriate. That will kind of go along with that theme. So I'm really excited to put the pine and make it look really, really modern and homey instead of, I don't know, like Christmas threw up. I mean, so I'm not a fan of the colors. That is pretty much the deal. There's more details, of course, but I don't want to take all evening. So I just wanted to share this with you guys as you're looking at different opportunities that are there in the market, out there in the market. Doesn't matter what asset class they're in, but in real estate. You know, I want you to know that there are savvy investors out there in the industry that are going into blind pool funds. We don't do that. You see the asset that's available. These funds are in Florida, so it's a very conservative state, and they were able to raise $1 billion during COVID while everybody was saying supposedly people are pulling back. The facts are that they were not. So people are just kind of making some crazy decisions out there because there's a lot of what we call dry powder or cash ready to be deployed. I want to share with you that you must have stringent standards for deploying your capital. Those standards should include 3 gold standard criteria. 1, is the project presently a profitable project and must be clearly making a profit at the day of closing? 2, there must be a playbook or a business plan blatantly showing a clear path to greater profitability and does not depend on the equities market economic conditions with hard evidence. So it must have hard evidence of prior proof. And then the 3rd, absolute operational excellence, proven expertise that can and will drive the project's profit. So just keep those things in mind when you're evaluating opportunities that are out there now and that may come in the future.